Now, when will things get back to normal, or is this the new normal? And if so, how should you play it? Bloomberg's Vera Gibbons and Adam Johnson are both here to talk about this with us. And Vera, let's start with you. What kind of new normal are we talking about here?
Well, it's a lot different than the way things were prior to the crash. It's not a pretty picture. It's characterized by slower economic growth, lower investment returns, higher unemployment, inflation. It's a trend that Bill Gross and others say is actually emerging, and their primary culprits: increased government regulation, you've got reduced access to credit, and of course we're saving more.
It's all,
it's not a happy scenario.
We have just talked to David Malpass. He said almost all these things as well. And of course, you referenced Pimco. Mohammed Al-Arian has been saying this for a while now. Adam, it doesn't mean, though, that you can't make money in this market, right?
No, absolutely. I mean, there's several themes at play here, and you can actually make money in spite of what's going on. Just, for example, slower growth. We call that theme number one. How do you play slower growth if growth is slowing here? Well, you get exposed to companies that have exposure or that are growing elsewhere.
India, China.
Yeah, exactly right. Exactly. Coca-Cola. Do you realize 75% of their revenues are made outside the United States? 75% for Coke, 67% for Nike. Oh, excuse me, Nike. I did call the company and they tell me it's Nike.
Yes, I've been getting complaints about that as well. You know, you're pointing out ways that you can invest in companies here in the U.S. and still get exposure overseas, while we see, for example, the MSCI Emerging Markets Index kind of put up a little correction
here. And the
here.
other trend that Adam's pointing out, too, is that we're saving more. So how do you play that one? Well, people are going to places like Walmart. Everybody's trading down.
Yeah, absolutely. Well,
the step-down trade here in the U.S.
Yeah, that's...
you can even go lower than that.
You could.
Yeah, well, just talk to Howard Davidovitz, and his comment, Dollar Tree, Dollar General, 99-cent stores. In other words, Walmart might actually be expensive. So, again, these are the stocks you can buy. Why? Because they're the ones who are actually benefiting from consumers trading down.
Exactly. I mean, you've been covering this story actually for a while, right? Walmart's even put in...
They've put in those 99-cent aisles. We've been talking about this a lot for a while now, that thrift is the new black. So...
You've been talking to Tom Keene, haven't you?
We keep saying that.
So it's interesting. You can step down here. You can invest overseas. And are we seeing people invest more directly overseas?
Well, the go-to name really is, and you know, we talk about ETFs all the time, EEM, the Emerging Markets ETF. What's interesting about this is you get exposure to effectively the world, from China Mobile to Petrobras in Brazil to Gazprom in Russia, etc. EEM, it trades millions of shares a day. That's the quick, easy way to get the non-U.S. exposure.
Well, and also the new normal may include inflation, right?
Tips.
We're hearing a lot about that.
In a word, tips.
That's right. And the TIP ETF, which, by the way, pays a monthly dividend, it's about 4.5% right now annualized.